All right, so I want to read this Wall Street Journal article about silver because, well, I have a subscription so I can read the whole article, and I know a lot of you don't. And I think it's fairly accurate and gives good information, unlike some other articles, like a video I posted recently from CNBC where they were calling silver the devil's metal and kind of fabricating and twisting the narrative. So the headline here is Silver hits record high on US rate cut bets, supply tightens. And this was posted, what is this? This morning, as I'm recording this, December 1st, 2025, at around 8 a.m. And it says, investor interest in precious metals has surged, partly driven by concerns over rising debt levels in major economies. So let's read this. It's a short article. And then there's a couple of other interesting anecdotal pieces I have about Fed rate cuts, what the odds are there according to Polymarket, and the gold to silver ratio. So it says silver prices climbed to an all-time high on Monday, and it did as well on Friday, as expectations that the Federal Reserve will cut rates further this month and persistent concerns over global supply tightness sparked a fresh rally. So expectations on a Federal Reserve rate cut. How do we measure that? Where do you look? Well, if we look at Polymarket, this is the betting and statistical sort of like basically gambling on all kinds of craziness. And so if we look here, the odds of a 25% basis point decrease in federal rates is 89%. So basically a 90% chance that they're going to cut rates in December. I believe it's the middle of December. I don't remember exactly what day. You can mention it in the comments, maybe December 12th, but 90% chance they will cut, and people are putting money behind this. So it's usually pretty accurate. And then only around 10, 11% chance of no change, and virtually no 0.3% chance of a increase. So very likely, according to this betting market, Polymarket, that they're going to cut rates. Okay. So basically that means, if it gets cheaper to borrow money, usually that makes inflation worse, and usually that pumps up the price of precious metals. Okay, so in afternoon European trade, silver futures in New York were up 1.2% at $57.86 a troy ounce, after hitting an intraday high of 58.61, while spot prices gained 1.7% to 57.35 an ounce after reaching 57.88. So both future price and spot prices are up. Spot price, the price that I believe refiners and people pay to buy that kind of raw silver before it goes and gets minted and turns into silver rounds and bullion and all that. Both are up. Okay. So prices have soared 99% this year, outpacing both gold and platinum. And I believe now it's actually gold is up silver is up over 100% year to date, as of the last few hours. Okay. So what they're saying is the surge followed a pause in trading on Friday due to a 10-hour outage at CME Group's data center in Illinois caused by a cooling system failure. Now, I posted a video on this, I think Saturday, and everyone was debating if this was true, and most people on X and who have their wits about them and are more skeptical are saying this is BS. There's multiple points of redundancy. Even a couple of you in my comments were saying I believe I think there's 3 points of failure. So the main, the backup, and the backup to the backup. And so this seems to be some sort of a lie or fabrication, because people are going crazy buying up physical silver and, paper silver, which unfortunately is heavily manipulated. I think there's roughly 300 paper contracts to every 1 physical ounce of silver. Again, you can correct me in the comments if I'm slightly off there, but the manipulation is being stretched, right? And people are buying it up. And banks are very concerned, okay, because precious metals are kind of a thermometer for inflation and trust in fiat currency and dollars, US dollars in this case, okay? So markets are currently pricing in nearly a 88% chance that the U.S. central bank will reduce rates by a quarter point in December. That's what we just looked at right here on Polymarket. It's now 89% chance of a rate cut. And this is amid persistent concerns over labor market weakness and dovish signals from some Fed policymakers. So low interest rates tend to boost the appeal of non-yielding assets that don't pay dividends or interest, aka gold, silver, platinum, palladium, okay? Precious metals. So, they go on to say, silver prices are supported by concerns that the U.S. might include the metal in future tariff policies after adding it to the Geological Survey's list of critical minerals last month, fueling significant inflows into the U.S. market. So these are all signals that, precious metals are spiking, and particularly silver, and even more so silver miners, which are, silver is more volatile than gold. It can go up and down quicker because it is a smaller market. Not sure if they say in this article, but silver is roughly 10% of the size of gold in volume. So it's more easily manipulated. And so this is interesting also with the note of silver now on the critical minerals list. Okay. So meanwhile, inventories on the Shanghai Futures Exchange have plummeted to their lowest levels in a decade, meaning people are buying actual physical metals, which you can't print, you can't dilute, you can't stretch because it's a finite resource, okay? And those on the Shanghai Gold Exchange to a 9-year low. So inventories are at a 9-year low in Shanghai, okay? And that's Commerbank analyst said, citing Bloomberg data, okay? So this contradiction was driven by a surge in Chinese silver exports in October, mostly shipped to London, where severe shortages have occurred. Again, people, not just in the US, but globally, are buying up physical precious metals, gold, silver, palladium, platinum, mostly gold and silver. And so shortages it's starting to be apparent that people are hoarding this because people are worried about trust and currency and where the dollar's headed, okay? So if silver deliveries were to return to China, global supply outside of the country could be even more constrained, the analysts said, all right? And so silver lease rates, the cost of borrowing the physical metal, rose significantly this year. So these are all signals that people are buying up the physical metals, not just paper ETFs and futures and options and all these things. and they're buying the physical metal because they're worried, of manipulation, of what happens if the CME group decides to halt trading again, likely to cover their asses and manipulate, and scramble to fix things when people are in a buying frenzy. Okay. So London, the global trading hub for physical silver, typically holds hundreds of millions of ounces in vaults to ensure liquidity. However, inventories have fallen sharply as concerns over potential U.S. tariffs prompted traders to shift holdings to the U.S. Additionally, rising demand for silver-backed exchange-traded funds, ETFs, has absorbed more of the metal, further tightening supply. Now, there was even rumors that I believe J.P. Morgan moved their gold trading into in towards the east, right? And it is, I believe it was Singapore. Now these are just rumors. It wasn't backed by any citations or anything like that. But it sounds like large groups are trying to get a head start because the markets in the East open up before the U.S. while we're sleeping and all that, and they're trying to get a head start on the trading activities, which shows that if big money is going after this, there's probably something there. And so investor interest in precious metals has surged in recent months. We know that because prices are up on silver 100% and gold on 160% on the year. Driven in part by concerns over rising debt levels in major Western economies and fears of currency devaluation. Gold prices up 60%, surpassing 4,200 per troy ounce. Okay, so silver, which typically tracks gold's movement, has the potential for larger price swings as its smaller market size makes it more sensitive to fluctuations in the dollar. Okay, that's what I said earlier. Silver has 10% of the market valuation as gold. So, prices can go up and down or be manipulated more easily. Okay, so the gold to silver ratio has recently decreased. Meaning the price of silver is rising at a faster rate. It currently takes around 73 ounces of silver to buy 1 ounce of gold, down from 89 ounces at the end of August. So, according to jmbullion.com, if we look all time, silver gold to silver ratio, it was as high as 111 in April of 2020. What is that? Right after COVID. And now it's plummeting. It's dropping to 72. Not quite as low as back in 2011, but you can see it's dropping here. So that kind of shows that silver has been suppressed, the actual true value of it, because of paper manipulation and other factors, and now it's being repriced as silver spikes. But gold's also going up, so we could see triple-digit silver at some point in the next year or so. It's really hard to say. I'm not I can't see into the future, but it's looking like an upward trend. Okay. Silver gold ratio, right? And then the final bit here is the white metal, meaning silver, is also much cheaper than gold, attracting a broad range of investors seeking more affordable safe haven assets, and is widely used in industry, from the manufacture of solar panels to artificial intelligence, semiconductors, and also EVs, electric vehicles. So, silver has industrial use. It is cheaper. So, poorer people can buy up ounces and not shell out over $4,000 a troy ounce for a gold coin. You can buy silver for, I think right now, I looked recently this morning, $60 per troy ounce of silver rounds, silver coins. So that makes it an attractive investment for retail traders. And so the final part here is, according to the Silver Institute, a nonprofit global industry association, the silver market is also set for a deficit for the 5th consecutive year in 2025 due to production constraints, expanding industrial demand, and growing investment interest. So silver mining is flat roughly in the last decade. Industrial demand is spiking. Retail demand is spiking. Central banks are buying up gold and silver. And so, yeah, you should be educated on this. Personally, I have paper silver ETFs. I have paper mining ETFs, and then also physical silver rounds that I've been stacking up a little bit recently. Hope this video helped. I'll see you in the next one.